Hello, this is Darshan Bhatt from Glovista Investments with our market outlook for the week beginning January 19th. This past week, the equity markets pulled back with the S&P 500 index down 1.48% and the Nasdaq index down 2.30%. This was the largest weekly decline since October 30th, a week before the November US elections. Although the equity markets pulled back this week, our core views are unchanged as the market internals continue to remain constructive, with the S&P 500 equally weighted index, the Russell 2000 small cap index, and the value indices all performing strongly. In our opinion, this past week, the markets focused on three things. Number one, the continuing rise in COVID-19 cases in the US and in Europe, as well as logistical delays in the rollout of the vaccine in several states. Number two, weakening macroeconomic data, including the US retail sales and jobless claims. And number three, the potential for violence in the scheduled transition of power from Trump to Biden administration on January 20th. On the flip side, discussions about $1.9 trillion additional fiscal stimulus, including some allocation for states, surely supports the 2021 growth outlook. In our opinion, given the political dynamics, we believe there is a good chance that the Congress approves another round of fiscal stimulus, though the exact details and size remains to be seen. In terms of the forthcoming week, we think the markets will be focused on two main things. Number one, the January 20th Biden administration's transition of power. And number two, the ongoing Q4 2020 earnings season, which began late last week. This week, 43 of the S&P 500 companies are scheduled to report, with the analysts estimating a 6.8% decline in year-over-year earnings. We believe the US companies will continue their streak of strong earnings beat from last two quarters, along with constructive, though cautious, forward guidance. From a macro data perspective, this week we will see release of several sentiment indicators from nations including US, Germany, and Japan reporting their PMI indicators. We also have the Philly and the Dallas Fed manufacturing indicators from the US, and you also have the ZEW and the IFO survey from Germany. Thank you for listening, and good luck.